The year is 1974. A secret flight carries Henry Kissinger to the scorching sands of Riyadh. The world doesn't know it yet, but the ink on a private parchment is about to become the oxygen of the modern age. This was the birth of the petrodollar, a ghost in the machine of global trade that allowed one nation to export its inflation and import the world's wealth. But every ghost has an expiration date. Welcome to the year 2026. The architecture is cracking. Look at a $100 bill. It is by all physical measures a worthless scrap of cotton and linen. It has no gold behind it, no silver to redeem it. It is backed by nothing but faith. But whose faith? Not yours. The faith of a supertanker in the Strait of Hormuz. For 50 years, the global economy operated on a simple, brutal law. If you want to keep the lights on, you must hold the dollar. To buy oil, you must first buy the greenback. This created a permanent artificial demand for U.S. currency, allowing Washington to run deficits that would collapse any other civilization in history. It was the ultimate financial alchemy. We turned black liquid into global hegemony. To understand why the system is dying in 2026, we must look at the moment it was cheated into existence. In 1971, Richard Nixon tore up the Bretton Woods Agreement. The world was told the dollar was no longer as good as gold. Panic ensued. The American empire was staring into an abyss of irrelevance. But then came the masterstroke. Kissinger didn't need gold. He needed something more essential to the industrial soul: energy. The deal with the House of Saud was surgical. The U.S. would guarantee the survival of the Saudi monarchy against all enemies, foreign and domestic. In exchange, every drop of Saudi oil would be priced exclusively in dollars, and those billions of petrodollars would be recycled back into U.S. Treasury bonds. The circle was closed. The dollar wasn't backed by gold anymore. It was backed by the very fire that powered every factory, car, and jet engine on Earth. This created a global rent system. Every time a factory in Vietnam produced a shirt or a worker in Brazil harvested coffee, they were indirectly paying a tax to the American financial system, just to acquire the currency needed to buy fuel. But macro history teaches us one thing: monopolies breed their own destruction. When you weaponize a currency, as we saw with the freezing of Russian reserves in 2022, you don't just punish an enemy, you terrify your friends. In 2026, the fear has turned into a coordinated exodus. We used to laugh at the idea of a multipolar world. We aren't laughing now. The expansion of BRICS to include Saudi Arabia, Iran, the UAE, and Egypt isn't a trade club. It is a currency insurgency. For the first time since the fall of the Ottoman Empire, the primary energy producers and the primary energy consumers, China and India, are sitting at the same table, speaking a language that doesn't involve the Federal Reserve. The petro-yuan is no longer a theory. It is a digital reality. China is offering the world what Nixon took away in 1971, a currency backed by something tangible. Not gold, but the promise of infrastructure, technology, and a massive, insatiable market. History is littered with the corpses of those who tried to sell oil in anything other than the greenback. Remember Saddam Hussein? In late 2000, he announced that Iraq's oil would be priced in euros. 3 years later, his statues were pulled down. Remember Muammar Gaddafi? He dreamed of a gold dinar, a Pan-African currency backed by Libya's vast reserves. He was silenced before the first coin could be minted. To the untrained eye, these were wars for human rights or counterterrorism. To a macro historian, these were currency maintenance operations. The message was clear: touch the petrodollar, and your regime ceases to exist. But the American empire made a fatal calculation. It overplayed its hand. By 2022, when Washington disconnected Russia, the world's largest commodity exporter, from the SWIFT system, it didn't just hurt Moscow, it broke the spell of universal trust. In 2026, the rebellion is no longer led by isolated dictators. It is led by the world's largest manufacturing power, its largest energy producer, and its fastest-growing consumer market. You can invade Iraq, you cannot invade the BRICS plus bloc. The most shocking shift in the 2026 landscape is the silence of Riyadh. For half a century, the House of Saud was the anchor of the American financial system. But Crown Prince Mohammed bin Salman, MBS, is a student of history, not an acolyte of it. He sees the green transition in the West. He sees a Washington that is increasingly isolationist. The Saudi calculation has flipped. They no longer see the US as their ultimate protector. They see China as their ultimate customer. In 2026, we see the unthinkable: the Shanghai Petroleum and Natural Gas Exchange settling massive oil contracts in yuan. This isn't just a trade shift. It is the decoupling of the global energy engine from the American Central Bank. When the Saudis stop recycling their oil wealth into US Treasury bonds, the plumbing of the global financial system begins to leak. The risk-free asset of the US Treasury is suddenly ... risky. Geography remains the ultimate arbiter of macro history. While we talk about digital currencies, the physical world is where the game is won. 2026 is defined by the corridors. China's Belt and Road Initiative has matured into a physical nervous system. Pipelines from Russia, power of Siberia, and the Middle East are bypassing the oceans where the US Navy still reigns supreme and moving energy across the Eurasian heartland via land. If the US cannot control the maritime trade routes of energy because the energy is no longer moving by sea, its carrier groups become expensive relics of a bygone era. We are witnessing the recontinentalization of power. The era of the Blue Water Empire is being challenged by the era of the heartland. The West shouts about green energy and the end of oil, but this is a grand illusion. To build a world of wind turbines and electric vehicles, you need copper, cobalt, and lithium. And who spent the last 20 years quietly buying up the world's mines? China. The transition from oil to electricity isn't an escape from geopolitical dependence. It is a leap from one trap into another. If 1974 was about the petrodollar, 2026 is about the electro-yuan. We are trading the choke point of Hormuz for the choke point of rare earth elements. The board has been reset, the pieces are moving, and the players in the West are still playing by the rules of 1974, while the rest of the world has already moved to a different game. For decades, the United States possessed a superpower subsidy. The world needed dollars to buy oil. The Federal Reserve could print trillions to fund wars, social programs, and bailouts without hyperinflation. The world absorbed our inflation. In 2026, the world is returning the favor. As petrodollar demand drops, trillions of dollars circulating globally are starting to come home. They flood back into the domestic U.S. economy, chasing a finite amount of goods. This is the macro-historical trap. The mechanism that made America wealthy is now its fuse for instability. When the world no longer needs your paper to buy their energy, your paper becomes just that paper. The architecture of 2026 is digital, but its implications are visceral. The rise of central bank digital currencies, CBDCs in the East, like Enbridge, creates a dark pipe. For 50 years, every international transaction passed through a US-controlled clearinghouse in New York. We saw everything. We could block anything. In 2026, a Saudi oil trader can sell to a Chinese refinery using a digital ledger. This ledger never touches a Western server. The financial panopticon is blinded. This is the ultimate loss of hegemony. Power is not just about guns, it's about controlling the information layer. By losing the monopoly on transactions, the West loses the ability to sanction, monitor, and dictate. We are witnessing the great bifurcation. On one side, the Atlantic Rim, US, UK, EU waging detritus, desperate to maintain their rules-based order. On the other, the Eurasian core, Russia's resources, China's factories, Iran's geography, and India's demographics. The struggle of 2026 is not a cold war of ideologies. It is a warm war of supply chains. The nation controlling the flow of atoms energy, food, minerals, will defeat the nation controlling bits and debt. The petrodollar was the bridge between these two worlds. With that bridge collapsing, they drift apart. Macro history teaches us that no reserve currency lasts forever. The guilder had its century. The British pound had its era. The dollar has had its run. The collapse of the petrodollar in 2026 is not the end of the world, but it is the end of an exorbitant privilege. We are entering an era of commodity realism, a world where strength is measured by what a nation pulls from the ground and builds with its hands, not by how much debt it can issue. The era of the paper tiger is over. The era of the iron reality has begun. So, what is the lesson for the observer in 2026? It is that the most dangerous illusion is permanence. Systems we think are laws of nature are often just temporary agreements between powerful men. The petrodollar was a masterpiece of 20th century engineering. But the 21st century demands a different engine. As the sun sets on the unipolar world, we must ask ourselves, are we ready for a world where the dollar is just another currency, and energy is no longer a weapon of the few, but the lifeblood of the many? The board is clear. The game has changed. Do you have the courage to see the world as it actually is? Or will you cling to the ghosts of 1974? The fall of empires is never a single event. It is 1,000 quiet departures. If you found this deep dive into the macro mechanics of our world valuable, join our community of thinkers. Subscribe to your channel name and hit the notification bell. We decode the architecture of the future. What do you think? Is the petrodollar truly dead? Or does the West have one last card to play? Let us know in the comments below. Until next time, keep looking deeper.